Hello everyone, welcome back. Did you get a chance to read the article titled Cannabis Stocks End Year on High Note? The article reports that shares of U.S.-listed cannabis companies surged after reports suggested that Donald Trump may loosen federal restrictions on marijuana. The proposed move would reclassify cannabis under U.S. drug law, easing tax burdens and improving access to financing for companies. Although no law has changed yet, the strong market reaction highlights how policy signals alone can reshape investor expectations. Let's take a closer look at today's story by checking your understanding with a short quiz. You can pause if you need more time to think. Ready? Let's get started. First question, what triggered the rise in cannabis stocks mentioned in the article? A. A surge in consumer demand. B. New company earnings reports. C. Reports of possible regulatory changes. D. A major merger announcement. Take a moment to think about it. The correct answer is C. The article explains that reports suggesting a possible easing of federal restrictions led to a sharp rise in cannabis stocks. Number 2. What change could benefit cannabis companies if the proposal moves forward? A. Higher export quotas. B. Lower taxes and easier financing. C. Reduced labor costs. D. Government subsidies. Consider your answer carefully. The correct answer is B. The article notes that reclassifying cannabis could reduce taxes and improve access to banking and financing. Time for a quick true-false quiz. Number 3. The article states that U.S. marijuana laws have already been officially changed. Think about your response. The answer is false. The article makes clear that no laws have changed yet and that any reform would take time. Number 4. The market reaction shows how sensitive cannabis stocks are to policy signals. Reflect on your answer. The answer is true. The article highlights that even early policy signals can strongly influence investor expectations in this sector. Having explored the article through these questions, let's now engage in a discussion to delve deeper into the themes presented. Consider the following question and share your thoughts. Here is a question for you. Why do you think markets react so strongly to policy signals, even when no concrete action has been taken yet? This question really gets to the heart of how markets work. What do investors respond to first, facts or expectations?
Markets are forward-looking by nature. Prices often move not on what has happened, but on what investors believe might happen next. Policy signals matter because they reshape expectations before outcomes are visible. In uncertain sectors, even vague hints can trigger moves as investors rush to position themselves early. As a result, markets often react to possibility rather than probability.
Thank you for the discussion today. This case shows that markets don't wait for certainty, they trade on anticipation. Understanding this helps explain why prices can move quickly, even when policy remains unchanged. See you next time.